Inside this window of time that begins at the left side of that London Open Kill Zone annotation box to the right side, in this area is when the trade begins, when the shift in market structure will occur, when the high of the day forms. 70% you have a probability that the high of the day will form between 2 o'clock in the morning and 5 o'clock in the morning, New York local time. But you have to have the other ingredients. You can't just simply say, okay, highs and lows, let's run some numbers and calculate, does the high of the day form on 2 o'clock to 5 o'clock on this day, this day, this day? No, you have to have the narrative in mind. And I gave it to you on the 13th. I told you what to use, this shaded area. My longer term students to know that if we're bearish, we don't want to see all of the inefficiency respected, which is a breakaway gap if it's a fair value gap. But we've already worked inside this range already. But now we're treating it as a resistance. That means it can trade up to the low and reject and go lower, or we permit our analysis to see price trade up into the midpoint, which is consequent encroachment right here. So I'm going to take that level off. Here we go. So when we're trading at consequent encroachment here, and it's in London Open, we bump the high. We want to see price do what? Show unwillingness to want to go lower. Does it sharply leave once it trades up in here, hits the buy side here, and then all of this back and forth movement that I'm showing you right here, all this here, price is spending time in that range. Is it efficiently delivered? Yes. Why? Because it's moved up, down, up, but it's only keying off of the levels I told you to focus on inside that shaded area. Consequent encroachment. We want to see, does it reject after bumping the high here? Yes. Once it leaves that shaded area, how did it leave it? Energetically? Yes. So now, enter model 2022. Buy side taken here. Shift in market structure there. Fair value gap there. I know. Corners of your mouth is hurting now. It's funny, isn't it? How this stuff just keeps randomly happening. All right, so we have our shift in market structure. We have our fair value gap. And then over here, what is this? What time of day is that? 8 a.m. So you're in the heart of what? New York Open Kill Zone. 7 o'clock to 9 o'clock. That's your little sweet spot. Your setup is going to form for continuation. You hold down control and drag, by the way, in case you want to know. I learned that from my students. All right, 7 o'clock. It can be left at 10 o'clock, but I'm going to show you the, whoops, don't want to do that. And this is New York. Okay, so inside this little window of opportunity here, you're focusing on what? We've already worked up inside that consequent encroachment here. We've already seen the evidence that it wants to reject that. We have a shift in market structure. We have a fair value gap. And the market rallies up into what? Time of day. That's when the move is going to happen. New York local time, 7 o'clock in the morning to 9 o'clock in the morning. That's your New York Open ICT kill zone. This is the London Open kill zone. This is your premium array. The range is from this high down to that low. That's the lowest low. Here's 50%. A premium is at or higher than that. Does that fair value gap qualify as a premium array relative to that high and that low? Yes. Is price returning back up to that shaded area? Yes. Where specifically? The low end of it. It doesn't need to go back up to consequent encroachment. Oh, consequent encroachment. It showed the signature that we would look for. It left the upper portion untraded to, again, worked off the low of that gap. If you don't have these levels on your chart, or have them at least annotated in your notes that you're referring to throughout the day. Now, in the beginning, you want to definitely have them in your chart because it's going to take you some time to get